Hello, it's Abbas from Milcart Group, and we're looking at the Milcart moving averages. These are the simple moving averages, and if you're more into crypto, then you should use more the EMAs, exponential moving averages. And please go back and look at this indicator and watch the video, because in this video we dive deep into the EMAs, the difference between EMAs and SMAs, the different EMAs we have, the crosses, golden cross, silver cross, how to use the EMAs, how to look at them on the weekly, on the daily, on the 15 minutes, how to use the crosses, how to build the strategies around this. So it's a really very, very rich video. It's a little bit tall, but it's a rich video that will give you all what you need to know about EMAs. It's like a crash course in moving averages, especially in EMAs and the crosses. So we advise you highly to go back and watch this video. In today's video, the Milcart moving average, we're gonna go into the moving average, but not as deep as the EMAs, because we don't want to make the video long and boring for you, because EMAs and SMAs, they're really almost the same. The difference is the SMA is simple moving average, where the moving averages in the last period, for example, a 200 daily moving average, it gives you the average price of the last 200. Exponentially is a little bit different, but at the end they almost use the same. In the traditional market, SMAs is used more given the history and less volatility. In the crypto, we use more EMAs. Let's dive deep into it. So let's look at the traditional market, since they use more the SMAs. Let's look at the S&P, for example. And since we're looking at S&P, that means we have really history, so we can go on high time frame. Let's go on the monthly. So this is the S&P on the monthly, and you can see our amazing chart, up only. When we look at it on the monthly, it's really straight line up. So let's add the indicator. We'll go to indicators, invite only, because all Milcart Group indicators and strategies are locked only for our community. So you come to Milcart moving averages, we add it on the chart, we go to settings, we remove some of the crowdness so we can look at it in an easier way. Let's first look at the actual image. What do we have here? What we have is the 10, which is the first one, the red, which calculates the last 10 months average price, 20, 50, 100, and 200. These are the most used periods and length of SMAs in the stock market. So what we can see here, let's look at it. Let's try to find some useful use of these moving averages. For example, the first thing I see in the crash of 2020, it really bounced exactly from the 100 monthly, and this is really an important level, and the 200. Why? If we look here, price dropped under the 200 monthly. This is a big drop, because remember, this is a 200 monthly. So this averaged the price of the last 200 months. So it really dropped under that. So this is opportunity of a lifetime. And it happened in the 2008 bear market or 2008 recession, where all this area was a nice buying opportunity. And after this, look what happened. Here in the dot-com bubble, it dropped only under the 100, but also was a nice opportunity. If you go back in history, it always bounces from the 50, see 50, 50, or the 20. Here we have another drop under the 200, which was in the 75 crash. So really, if this happens maybe once in our lifetimes, and they are the best times to buy. This is a really good time to buy, given what will happen after that. So this is a monthly. Let's look at a daily, for example. Let's take a different asset. So this is the daily. Let's look at the crosses. Let's put the golden cross. And so golden cross is 50 with 200. That's what is a golden cross. And a death cross is 200 under 50. I'll explain more. So the green is the fast moving average, which is the 50 average of the daily, so 50 daily moving average, and this is the 200. When an asset is trending lower, the fast moving average, which in here you can see when the slope goes down, it's dark green. When the slope goes up, it's bullish, it's light green. Same thing. This is how you know exactly you can tell directly from the visual if the asset is in downtrending or uptrending. So we can see the 55 here started to drop lower. Why? Because the price, it went sideways and start dropping. And then it crossed under the 200. That is considered a bearish cross. But for example, how to use it? In a bull market, which was since 22, this is a strong bull market. The death cross really sometimes gives an opportunity because it prints a bottom before it push higher. Because when the death cross happened, the correction already either finished or in half. If it will continue in the bear market, for example, here, this is a very good 2022. The cross happened. There was an immediate bounce, but it couldn't go up to new highs, and then it dropped to a new bear market. If you see death cross, bounce. Usually when you happen a death cross, you'll get a bounce because for the death cross to happen, that means the asset was trending since a lot of days. So it tried to bounce, it failed, and then it went in the bear market, back tested, down, back tested, until it crossed up. When it crossed above it, same thing happened. When the golden cross happened, that means it's been trending since a lot of days, and the market needs to consolidate. So it drops back to a higher low, and that was it. So if you bought anywhere after the golden cross, here or here, you managed to, let's say you bought the top, you managed to do a lot of profit. See what's happening from here to here. Same thing we get here. We get the death cross, almost the bottom, and now golden cross. How long it will go? It will repeat this or it will fail. Time will tell. But these are really good. Death cross, the drop is over, almost over. Golden cross, it's time to go up. So these are some examples. And we have the same, which is a silver cross. Silver cross is simply the 20 with the 50. So in this case, the 50, which was the slow in the death cross and golden cross, is now it was the fast moving average. Now it's the slow moving average. And the 20 is the fast one. It's good to be used on the low time frames for fast scalping, because they flip before. Let's take another example because there's a lot of gaps here. SPY. Let's look at the futures, NQ futures. For example, silver cross, it happens before the golden cross because it uses a lower period moving averages. But you can see every time you get silver cross, it's a bounce up, it's a bounce up. You can build some strategy around it. I don't want to make the video so long but please, we advise you, go back to the EMAs and look at the video because we go into more deep dive into it. So let's look at the settings. So we go to settings. We can put the death cross, golden cross, same things, and we look at the prediction. So this will predict a cross before it happens. So for example, for the silver death cross to happen, it can't happen easily because they are very far away from each other. So this need to close under here for this to cross on the 4 hours, which is almost won't happen easily. So that's why the number is very far. But if the moving averages become more close to each other, let's try to find okay, this is a better one. So for the silver death cross to happen, this to cross here, it should close under 6836. So also very deep down. But let's say the price keep trending lower, this will go lower. So somewhere here, the cross will happen. So this number will go lower. It will go higher and higher as the price. So this is the prediction. It's very useful for strategies, especially if you want to know, okay, so this is a line on the sand now, especially when you're closer to this. Let's take an example. Okay. For the death cross to happen, which is the green 50, to cross under the 200, it need to close under, it need to close here. So these are useful for some strategies, day tradings, and as we said before, on the daily, these are very, very useful. More details and more deep dive, especially in the crypto and the EMAs, which we advise you to go watch the video. Till next video, thank you so much, and let us know if you have any questions, and thank you.